Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video we are going to start a new series where we are going to discuss about weekly market analysis specifically for US market. So in that we are specifically going to discuss about the market and how it has performed in the past 1 week and probably how it will perform in the week coming forward. And we are going to discuss about how different trends have already shaped in the previous weeks and how it probably shape in the upcoming week to get a sense and understanding about the market and what we are going to expect or what we are going to do with that in the upcoming market. And probably we are going to continue this series going forward, and this is going to be a weekly once video, and it will publish on the weekend to discuss about the trend on the US market. So let's start the video now. As you can see on your screen, the basic details of the important indices as well as of commodities, treasuries, the volatility index. Now we have seen some turbulent volatility in the past 2 weeks, and in the last close of 5th of March 2021, the Dow Jones and other indices has performed very sharply, and what we have seen is the market made a sharp bounce back. Now, what we are going to do, we are going to analyze each and everything so that we get to know how it will perform or how the overall market will probably perform in the upcoming weeks, as I told you. So let's go to the chart section and where we are going to discuss about all important things. So this is what you can see. So the most important thing that everybody is tracking is the volatility index, right? So what you can see on your screen is the chart of volatility index, and it is very clear that in the past 6 or 7 months the cboe volatility index has been moving in between a particular range. What we have here is 20 on the downside, and on the upside you have 41. So there is only one spike that has occurred in the month of November, and this is the highest. Okay, and then we have 37, which the index has touched 2 times, for I think first in the month of September, then we have in the month of January 2021, and then we have this recent spike of 30. Okay, so here we have, and on the downside what you have here is this one, 25 and 20, and it is very much clear. And if you want to use this one, okay, 21 and then we have 20. So what you can see in this particular chart, so these are the two support levels, that whenever the volatility index falls below 25, there is a very high probability that the index will definitely go and retest 21 and 20 on the downside, which means that probably the volatility in the upcoming weeks is going to go on the downside, and probably the stock market and the stock indices will go on the upside. Okay, so this is what we can get from the chart of volatility index. Now there is one more factor or one more important chart that cause volatility in the stock market, and that is dollar index. Now if you are looking at the dollar index, let's go to the short term chart to get a sense about the short term move. So this is what you can see in the dollar index, and I think, yep, here we have. Okay, Now the dollar index has been rising quite sharply from the lows of February 25th 2021, where it has touched 89. Now it is trading at 91.99 and it went up to 92. So this is a sharp spike. I mean, as far as currency is concerned, it meant a lot. Now if you draw a chart about the trend, okay, what you can see here is something like this. So here we have the trend. Now as you can see here in the dollar index, that it actually went up to the upper end of the range, which is 92.2, and it went down and currently trading at 91.99. Now 91.95 is the support level, and if it falls below 91.95, it can actually move towards 91.43. It may looks and sound small, but with this small move, equity market may jump, very high, because we are talking about a currency, and even a small move meant a lot. Okay, now it has touched the higher end of the range, and it again coming down toward the lower end of the range. That's a good thing for the equity market. The only concern is if it started moving up, and if it makes a breakout above 92.4 or 92.5, then it will be a cause of concern, because in that case the stock market may fall on the downside. Okay, so that's the downside risk we have, because currency strengthening is not a good thing, and if it moves, I mean, $2 or $3 within a span of 1.5 months, then it is a very big signal, and you cannot miss these kind of signals. Okay, so this is what you can see. So right now we have VIX, which is signaling that it is going to go on the downside. On the currency, on the dollar index, we have seen that it has tested the resistance and it started falling down, and let's see how this will move. And if it falls below 91.9, and if it started to go on the downside towards 91.5 or 91.4, then obviously it is a good signal, and the stock market may react positively on the short term, on the upside and in the short term. Now going forward, what we are going to look is the price of commodity or the crude oil index. Okay, so if you're checking at this, so this is the WTI crude futures, and as you all know that the chart of oil has been moving very sharply in the past couple of weeks, and it's actually moved from nothing to $66, as you can see, because we have seen that the commodity prices, specifically oil, went down below zero. So that's not physically possible, but in the world of trading, it is. Then the level which we are going to look at here, okay, so this is the downside, the support level, and here we have the upside. Now as you can see here, okay, so this is another good sign, because probably in the short run the oil is at its resistance near 66.66 or $67, okay, per barrel, and the support will come near 60 or $61. So this is another good signal that commodity or the oil price may hit the higher end of the range in the short run, and it will probably go down towards 60 or $61 before taking its next move. Okay, so this is another good signal, which you can see in the chart of crude oil. Now, going forward, there is one more instrument uh, which is very much talked about, and that is US 10-year Treasury. But I will use the 2-year Treasury bond, uh, 2-year yield, because 2-year Treasury yield is very much susceptible to market volatilities, and it will give you much sharper rise, because when the tenure is small, the moves are much sharper when compared to the higher end of the range, which means if you are looking at 10 year or 30 year, it will not move as fast as 1 year or 3 months or 6 months or 2 year does. So that's why we are going to use the 2-year yield. And if you can see here, okay, so the 2-year yield has been moving in between this particular range on the downside as well as on the upside. So in the last 1 year, this is the lower end of the range, okay, so this is the lower end of the range, and as far as the higher end of the range is concerned, so this is what we have. Now that's what, when the instrument is trading and it's going up, and when the news flashed that the treasury is going up and other things doesn't work in a favorable manner for the stock market, we get panicked. Rather than that, if we know how the trend is moving for different financial instrument and how do we prepare ourselves, it will give you, or it will put you into a much better position, rather than simply taking unnecessary decisions or buying or selling things which is not important, okay, or which you shouldn't do at that particular time. Now you have your resistance at 0.15 and 0.17, and the higher end of the range is 0.19. Now, as you may see that unless the yield crossed 0.15, there is a very high chance that it will move towards the lower end of the range, which is 0.13, 0.12 and 0.10. So here, if it crossed above 0.15, then there is a high probability that it will move toward the higher end of the range, which is 0.17 and 0.19. And if it holds at or below 0.15, then it may fall back towards the lower end of the range, which is 0.12 and 0.10. So till now, what we have seen are some mixed signals, okay. So here, as far as treasury is concerned, it is not signaling anything that it's going to move on the upside or on the downside, because it's a flat chart. Now what gives us a positive signal are 2 or 3 things. First will be the volatility index, second will be the oil, and a third will be the dollar index. But then dollar index, the way the dollar index is moving, unless the confidence is broken, it won't stop in the short run, okay, because when you have such ample liquidity across the globe, so if other, as you know that the composition of dollar consists of different currencies, so if one currency goes down, the dollar index will go up, okay, so it works both the ways. But still we have some positive cues in the basket. Now having said that, what we are going to look at is the chart of DJI, and it is nowadays Dow Jones is very famous even in global market, because the way it is moving, everything, I mean every market participant looked at Dow Jones. It's not only about how the US market participant feels, but other market participants are also looking at Dow Jones, because its movement, the correlation of Dow Jones and other indices nowadays are very much closely interlinked. Now, if you are looking at the chart of Dow Jones, there is nothing called it is in correction or something. Okay, what you can see on your screen, and this is the chart of Dow Jones, and in the past 2 or 3 months, what you have seen is that the Dow Jones has been moving in between a range rather than saying that it is consolidating, it is correcting, or it is going on the downside. It is actually moving in between a range, and that puts the entire global market in a jittery mode because uh, it seems like something is falling down. Okay, but if you are looking at this chart, what we have seen, if you calculate the move from the lower end to the higher end, it's a 1800 point move. Okay, and the Dow Jones has been moving in this range in the past 2 or 3 months, and it makes the global market uh, in such a bad spot that everything, it seems like everything is going to fall down, and we will again go back into a recession. Actually, we are in a recession technically in some of the economies or most of the economies, but I'm talking about a stock market recession which we have seen in 2008 2009, but that's not the case here. Okay, the overall trend is up, and what we can see is volatility, and Dow Jones has been moving in between a range. Okay, and the range consists of 32,200 on the upside, and you have 30,433 on the downside. And if you are looking at this current move with one single move of 500 or 600 point, it recovers the half of the range. Okay, it travels the half of the range, and this is the resistance which, so this is the resistance which the stock index has crossed, 31,449. So first on the downside we have 30,810, we have 30,582, and we have 30,433 as our three important support levels. On the upside we have one resistance which Dow Jones has recently crossed, 31,449, and if it continues to hold this level, we have 32,213. Once it's not 213, it is actually 237. So once Dow Jones crossed 32,250 and beyond, you will see a bigger rally in the stock indices. Okay, technically this is what we can see, and in the overall chart, as you can see that it's going up and down, but if you're drawing your trend for 1, 2 or 3 months, it's actually volatile. Rather than saying that the whole world is falling down, it's actually volatile, and you will see these sharp moves which is going up and down, and probably this is the time when a decisive move will come either on the upside or on the downside. Okay, so this scenario will uh, end very soon because the trend is expanding. Okay, as you can see, the trend is expanding. Previously it was in this band, or like previously the band was 700 point. Then the band expanded, and so the band expanded up to 1200 points, and now it is like 16 or 1800 points on the upside. So the band is expanding, and we will definitely see a breakout beyond the range. Okay, so don't worry about that, and probably chances are, the highest probability is it will break on the upside rather than on the downside. Okay, now this is what we can see as far as equity markets are concerned, because the most of the instruments are directly or indirectly related to equity market. Now take a dig at let's take a dig at gold and silver, because this is also an important aspect as far as markets are concerned, and we can see that gold has taken a sharp knock. I mean, it's not expected to take such a sharp knock by gold, because see, one thing you need to understand, because when there is so much liquidity into the market, there is no way that a commodity like gold and silver is going to go on the downside. So reasons are many, but the thing is, when you have demand in the market, the price of everything will go up. Okay, and gold and silver are in the spot. So if things are happening on the downside, it is just because of you can simply take any reasons, but there is no chance it will going to fall down and nobody cares about it. Okay, so what you can see is a trading or trailing downside, and it's technical in nature as far as the trend is concerned. And if you are talking about fundamental and the reason, you have lots of reason in the market, but as far as the range is concerned, so this is the price of gold futures. Now here we have the support will come at $1668, and once it hits, it will probably move toward 1886 on the upside, or in between. Here we have 1850 and 1886 on the upside. So this is what we have in the chart of gold. Yep, so this is what we have. Okay, and probably it is very near to the to the lower end of the range, which is near 1660 or 60, in between 1660 and 1670. So probably the fall is very near to its end, short term fall. Okay, now as far as the next chart is concerned, and probably the last chart, is the price structure of silver. Okay, so this is the chart of silver future, and this is showing, because when you're comparing gold and silver, now silver is holding strong. Okay, it is not going down, it is just consolidating in between a range starting from $11, and the high it has made is $30. Okay, so here we have, which is showing that probably now it's the time for silver, rather than focusing on gold, you should focus on silver, because the kind of strength we have in the price chart of silver is telling a different story. Okay, and if you can see, it is holding at or above the support 24.97. So this is the support which silver is holding. So you have three important support level, which is the lower end of this consolidating range, starting from 24.97, then we have 23.9 and $22 on the downside. And because it is holding at 24.97, so the two targets which we are looking will be on the upside. We have 28 and $30. Okay, so this is what we can see, and once silver surpasses $30, then probably it will move towards the $50 mark. So there is a fair possibility of that, and probably this is the time, because last year gold has performed, but this year probably silver will perform much better than gold. But let's see how things will turn out. And there is another thing, that gold has corrected very sharply, so probably the up move will be in the similar manner, and we are going to see recovery in both gold as well as in the price of silver. Now, as a summary, I hope that I am able to communicate the overall gist of the market, and you can fairly get a sense about the trend, how it has moved and how it will probably move as far as different instrument is concerned. And when it comes to equity market, you have seen how the Dow Jones has moved and how it will probably move in the next, or probably in the upcoming days as well as weeks. And as I told you, we will based on the response, we are definitely going to continue this series, because it's very important to summarize, because those who are in market and those who are professionals, they are summarizing each and everything, and they worked in a very planned manner. Okay, so it's better to get updated, it's better to understand things and then prepare yourself. Okay, rather than simply buying and selling stock market is not restricted to that, and it is not only about buying and selling stock. We are not here to simply, it's not about gambling or putting money, putting $1 taking out $3. It's a different subject. If you want to stay in the game, you need to learn, you need to evolve, and you need to discover yourself. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.